All right, all right. Hello, everyone. I think we are live. Cool. Let me know in the chat if you guys can hear me, see me. How's the quality of the video? How's the quality of the sound? Please let me know. We're just going to do some tech setup over here, and then we're going to get started. So this is a tax strategy Q&A. If you have any questions about any tax planning strategies, how you can save money on taxes using tax strategies, chat is your best friend. Make sure to use chat, okay? And let me know if you guys can hear me, see me, and so forth. Meanwhile, I'm just going to set up some of my tech stuff over here so we can get going on this thing. Let's see. Boom. Okay. I think everything is working well. All right, Mike, what's going on? All right, we got a message from Mike. All right, awesome. We got questions coming in. I'm just going to move some of the stuff around. Oh, you need this? Sorry. Okay. All right, guys, everybody, Mariana is here. Say hello to Mariana. Okay, so she's going to be taking your questions. And I'm just move the keyboard to you. And this is also, I don't know if you need the keyboard. Huh? Do you need the notepad? You got it. So you guys see we're like almost ready, right? Almost ready. Okay, cool. All right, let's do it. Here it is for you. Perfect. Here's the mouse for you. And we've got questions coming in. All right, cool. So let's do it. Let's do it.
We have one question before the live. I'm just gonna read it out to you.
No, let's do questions that are people on the live. If the person that posted a question before the live,
Yeah,
just see if he's still here. All right, can you guys hear me? Is the sound okay?
Sound is great. Thank you, Mike. So
right,
Mike
let's do it.
says hi. He says regarding S-corp owner, 2% owner insurance. I pay for the policy. I recently set up Gusto to have the health insurance show on the payroll. How do I now reimburse myself from the S-corp? Do I need to run it through payroll or can I just write a check? How is it accounted for so that it is not expensed twice? If the expense is already accounted for through the payroll, is the reimbursement just a transfer? And is it too late to adjust 2022 W-2 for 2% owner insurance?
All right, great question. So Mike is asking, hey, Boris, I want to start using the 2% health insurance tax strategy, right? So for those of you that don't know, 2% health insurance means if you're an owner of an S corporation, let me make this a little bit this way so we can see the audio better. All right, if you are an owner of an S corporation and more than 2% shareholder, then what happens is that IRS says, hey, if you want to take this as a deduction, the health insurance as a deduction, what you need to do is include your health insurance as part of your W-2. And what happens is that when you include it as part of your W-2, number one, you get a tax deduction. Number two, you don't pay any FICA taxes on it, right? Social Security and Medicare taxes. That means that whatever the health insurance premiums are, let's say it's $20,000 of health insurance premiums, well, you're not going to pay 15.3% tax on that, okay? If you properly include it as part of your payroll. Now, Mike is saying, hey, Boris, I've set up a Gusto payroll, okay? So for those of you that don't know, Gusto is a company that we personally use for ourselves. We also use for all of our clients as well. It's very easy to set up Gusto payroll. What happens is that, and we'll put the links for those of you that want to join on the replay to use Gusto. We'll put our affiliate link, and I think you'll get like $100 for it for signing up. But what happens is that when you do use Gusto, it's pretty simple, like I said, to set up. You also start using the tax strategies that we give you, right? Which is, but honestly, any payroll software has a 2% health insurance option. Gusto is just our choice because it's so intuitive and easy to use. Now, Mike is saying, Boris, if I already included it as in Gusto, so Mike, I want to take a step back for a second, okay? So I'm gonna assume, let's just assume your salary, your reasonable compensation is $100,000, and your premiums are $20,000. Okay, let's just assume that. You want to make sure that in Gusto, you don't set up your salary as $100,000 and then health insurance as $20,000. You don't want to do that. What you want to do instead, set up your salary in Gusto as $80,000, and then add health insurance of $20,000. So your total reasonable compensation, right? If it was originally $100,000, it comes out to be $100,000. The reason you would want to do this is to ensure the number one tax deduction and the FICA deduction, okay? Especially the FICA deduction, really. So you want to make sure you set it up this way. Now, however you pay for health insurance, it doesn't really matter. You can pay it personally or you can pay it by the business. If the business pays for health insurance, for example, if I don't remember how Gusto does it, every payroll company does it separately, but when Gusto issues you a paycheck and net pay through their system, I don't recall if it includes health insurance in it or it doesn't as part of the net pay. If it does include health insurance as part of the net pay, just pay it from personal. If it does not include health insurance as part of the net pay, do it from the business. It doesn't matter who pays for the insurance, okay? As long as it's set up this way. Hope that makes sense. All right, we have more questions?
Yes. Eddie is asking, what's the correct way to take out prior year's retained earnings out of my S-corp because I need the money now? In the past, I didn't take all the distributions, just a large salary. Should I just take it all out as a distribution?
Okay, Eddie has a really, really good question. Okay, Eddie, can you hear me say hello? By the way, guys, if you find this information helpful, please like it, share it, help the YouTube algorithm kind of expand this video, right? So we can get more business owners that we can help. All right, so Eddie is saying, Boris, right? If I understand this correctly, Boris, I have retained earnings in my S corporation, right? I have retained earnings, and now I need the money. I need to take the money out from my S corporation. How do I do that? Is that the question? Did I get that right?
Yeah.
Okay. Mariana, can we get our book, the Thinking Outside the Tax Box? All right. So, Eddie, first of all, when you say I have retained earnings, I'm assuming that every year your S corporation has been making money and you have not been taking out enough distributions, and now the money is sitting in the checking account. If I'm correct on that, say correct. And your question, I was like, how do I take that money out? Now, from the information that you're giving me so far, all right, so you said correct. From the information that you're giving me so far, looks like you do have retained earnings, and that means you have enough equity. When you do have enough equity in your S corporation, shareholders' equity to be exact, that means you can tap into that shareholders' equity and take the money out anytime. There's no tax consequences because you have already paid the tax for it in previous years. So if year number 1, year number 2, and year number 3, right? Let's say you were left with $100,000 in the bank account, your equity, you didn't distribute it out. Year 2, 100,000, additional 100,000, right? So it's 100 plus 100. In year 3, 100 plus 100 plus 100, you have 300,000 sitting in a bank account that you never tapped into, and it's sitting in a business account. You can totally take this out. There's no tax consequences because you've already paid tax on it through your K1. Now you might say, well, Boris, will I get audited for taking out such big amount? Is it a problem? Does IRS look at it? The one thing you want to make sure that you are 100% in compliance is reasonable compensation. Did you take out a reasonable compensation from the business? Now, will you be audited for having a smaller reasonable compensation compared to a distribution? Maybe yes, maybe not. You never know what triggers one of those audits. What you don't want to have is like no reasonable compensation or very zero reasonable compensation or very much just zero. I mean, let me kind of take this a step farther for everyone over here. And Andy, I see you're here. I have an answer to your question, by the way. I remember. I didn't forget. Okay. I do have an answer to your question. Okay, Andy, if you're here, say here, so I know you're here, because I want to talk about it while you're here. So, Eddie, one thing I do want to make sure that everybody on this call knows is as following. S Corporation files Form 1120S, okay? Line 7 of S Corporation, okay, line 7 of S Corporation, I should say line 7, is asking for officer compensation. Okay, Line 7 is asking for officer compensation. Now, if this line is 0 and you've got large distributions, or even if you don't have distributions, but you are an active owner of an S corporation, this triggers an audit. Now, you might say, well, Boris, I have a pretty reasonable compensation. Let's say it's $100,000, but my distributions are pretty high. Could that trigger an audit? I'm not saying it won't, but I'm not saying it will either. But in case it is, you just want to make sure you're paying yourself a reasonable compensation. Coming back to your original question, what can you do with that return earnings, with that money in your S corporation? You can take it out. I hope that was helpful. All right, next. Andy, are you with us? Because I have your question from last week. Let me know if you're here so I can answer it. That's Andy Campbell. All right.
Andy's here.
Okay, Eddie says large compensation, very little distributions. That was probably in the past. Now you can switch that around as long as you have a compensation. Now, one thing, Eddie, if your compensation is too large, you might want to adjust it to what it really should be reasonable, right? And that could save you money on self-employment taxes. All right, Andy, can you read me some of Andy's questions? I remember them from last week, but let's read it out for everyone.
All right. I asked you last week, and you said, think about it. So, rental properties in a 30-year-old S corp, no wages, 18,000 health insurance premiums. How to write this off without adding salary and FICA, since adding FICA will cancel out writing off insurance.
If I remember correctly, you had 6 apartment buildings, Andy, and you have a 30-year-old S corporation, and your apartment buildings are inside the S corporation. Your main question was as follows, right? Your main question was, Boris, I want to be able to write off my health insurance. And how do I write off my health insurance? Because we already explained last week that if you're an S corporation that holds properties, that is still a passive income. It's not an active income. So you don't need to pay yourself a reasonable compensation and jump through all those hoops, so to speak. But the question that Andy has, but I have health insurance for which I pay for $20,000. How can I write that off? So I told Andy that I'm going to think about it and come back to him with an answer. I do have an answer. I don't know if it's a perfect answer, but we can try to make it work. So there is something that is called HRA 105 HRA plan, right? 105 HRA plan. It's basically a health reimbursement arrangement. It works perfectly. It works perfectly when you have one owner business, or you own the business with your spouse. What happens is that you can then set up an HRA in a management company, such as a C corporation, right, which is a management company, and you will receive salary from that C corporation, and then that salary will be offset by any health insurance premiums, any medical expenses. You really can set your own limits on this. We, of course, don't want to create unreasonable limits, but let's say you know that your health insurance expenses are like $40,000 a year. All right, you can actually set up in your HRA plan document to be able, as a fringe benefit, to be reimbursed from the company $40,000. Now, the way it works is that you've got a C corporation and you've got 6 properties, right? So I'm just going to do this. Okay, 6 properties. Now, this is going to be a management company, and you're going to pay yourself from the rental properties management fee, and then you're going to pay yourself from the management company a W-2 with fringe benefits. Okay, because C corporation, as an owner of a C corporation, unlike S corporations, you're allowed to have fringe benefits, and one of the fringe benefit will be this reimbursement arrangement. Now, again, I'm putting out all this content and all this information to you guys for educational purposes. I always recommend to please work with a tax advisor to implement any of this stuff, okay? This is just more like educational. Understand it, that it is possible in your case, okay? It's never like you cannot take a write-off. It's always like, how can I make it a write-off, right? And this is what this content is about, is how to make it a write-off. But please speak to your tax advisor on properly implementing it. There's obviously things involved here. Now, the reason why I said this answer might not be perfect answer for you is as follows. When you do something like this, obviously you're trying to pay less in taxes. And IRS looks at this stuff, right? They're like, hey, are you doing something shady even though it's quote unquote legal, like such a thing can exist. Like a C corporation can be a management company. A C corporation can have an HRA 105. A C corporation can pay its owner on a W-2 and take a fringe benefit. But the question really becomes, is this ordinary and necessary? We can answer that you are a management company, but 6 apartment buildings, so you've got to manage them. So you are employing yourself to manage it. It's totally okay. And then the question really becomes reasonable, right? Let's say, for example, I'm just going to use an example. Your health insurance, you told me the premium is still on at $20,000, and you're going to pay yourself a management fee of $20,000 to take advantage of this. But is that management fee reasonable? Maybe a management fee for 6 apartment buildings is not $20,000. Maybe it's $100,000, right? And you are undercharging yourself a management fee so you can take advantage of this. That is what makes it not perfect. Now, I do have a solution for you. You might only charge yourself a management fee for one apartment building, or for 2 apartment buildings. I would let you work that out. I totally see this happening as a case, and this is the way that you can write off your health insurance. Let me know if that was helpful. I was really thinking about it for a week, Andy. Let me know if that was helpful. All right, we'll take any more questions that we have on the live. Guys, go ahead. I think, did we have some questions from Mike that were unanswered, Mariana?
No. No, we answered this question.
Cool. All right, guys, let's get going. Yeah, keep the screen right there for a second. Perfect. Awesome. And I think we're done. Let's scroll down. Let's see if we have any more questions. Cool. Guys, any questions? This is the best time to ask. Like I always say, okay? Like I always say, if you are working with a tax preparer, you do not have a tax advisor, and you're most likely overpaying in taxes. My job with these weekly lives is to help you save money on taxes by answering any tax questions. We release a lot of content on YouTube. Sometimes this information is confusing and you can't understand it very clearly. I make this content so that you can ask us questions. So take advantage. Let's go. Do we have more questions?
Okay, Julietta says,
By the way, but that person I forgot to mention, the person who participates the most with the questions will get this book delivered to them completely for free. It's on Amazon for like $21. We're going to choose a winner. Okay, we're going to choose 2 winners today. Maybe 4 like we did last time. We said 2, but we picked 4. We will email this to you, thinking outside the tax box. So the most participating individual with questions, we want you to ask questions, will get this book mailed to them completely for free. All right, let's go.
All right, we got a hi from Julietta. First time here from Florida.
Hi, Julietta.
Andy Campbell. Second question. Last week you mentioned family property management company to write off a child's income. That sounds awesome. But since it's rental properties in the LLC and there isn't any FICA, if we set up this new structure and it has income, won't I have to pay FICA on all of that income, which will negate the child's write-off in income?
Read that again.
You mentioned family property management company to write off a child's income.
That's correct.
Sounds great, but since it's a rental property in the LLC and there is no FICA,
correct.
If we set up this new structure and it has income, won't I have to pay FICA on all of that income, which will negate the child's write-off income?
Okay, so Andy is saying, hey, Boris, you talked about hiring your children and setting up a family management company, and it sounds great. It sounds like an additional write-off for me. But right now, I own an S corporation, right, that has only rentals. Right, so Andy has rentals in an S corporation since like 1996, I think, right? So he says, I don't pay any FICA tax on it because it's all rental income. We don't pay FICA taxes on the rental income. So, but if I pay my children, if I set up a family management company and I pay my children from a family management company, but so now I'm going to have to end up paying FICA taxes. So almost correct, Andy, and you won't have to pay FICA taxes. Let me explain to you. IRS says if you are a parent that is employing your children, for example, if you are a parent, excuse me, I take a step back. If you're a parent employing your children, you do not pay FICA taxes, okay? FICA taxes, no FICA taxes. So you pay directly to your children. As a parent, you don't pay FICA taxes. Now, you're not considered a parent, not a parent, when you are a corporation. Let it be an S corporation or a C corporation. Even an LLC that is chose to be taxed as an S or a C corporation does pay 15.3% FICA tax. So when you do set up a family management company, in your case, right, you can set up a family management company that is a single member LLC, and that family management company can manage your 6 apartment buildings, and apartment buildings pay you management fee, and from here you pay your children. And what happens then? You do not pay any FICA tax on it. With you, you have to make a decision, Andy, because I think I already know you, right? With all the questions you've been asking, with you have to make a decision. Do you want to have a C corporation as a family management company, like a legitimate family management company, to help you with your health insurance expenses, or a single member LLC for hiring of the children? All right, next question.
From Julietta, can I deduct health insurance from S-Corp if I am an insurance sales agent?
So Julietta says, hey, I'm an insurance sales agent. That means she's most likely selling insurance for a living, right? As an agent. So let's say S Corp. She said S Corp, right?
Mm-hmm.
Okay. Can she deduct health insurance being an agent? The answer is absolutely yes. We have a video on how to exactly do it. We also spoke a little bit earlier in this live about that. But just to kind of give you an idea, if you have a health insurance as an S corporation owner, if you own more than 2% of your S corporation, and I assume you do, right? What happens is that you want to make sure your health insurance gets reported on your W-2 as part of your reasonable compensation. It will help you achieve 2 goals. Goal number 1, it will let you take an income tax deduction, which is what we all want. And goal number 2, you can double dip. I like to call it double dip because you will also save on FICA taxes on the health insurance premiums. Hopefully that's helpful. Next question.
Jules says, hello, first time here.
Hello, Jules.
Mike is asking, just to clarify, do I write a check from the S-Corp to reimburse the health insurance premiums? Payroll doesn't transfer funds. Do you suggest,
Yeah, Mike. So yeah, like I told you earlier, I'm not sure how Gusto works. I forgot, but from what you're telling me right now is that when you get a net pay from Gusto, the net pay does not include the health insurance reimbursement. If it does not include health insurance reimbursement, your business can just reimburse you or pay for health insurance directly. Now that I think about it, I think you are right. It doesn't do the net pay reimbursement, the reimbursement and net pay, because I have my health insurance through an S corporation, exactly your situation. I use Gusto, and I know that I pay for our health insurance, family health insurance, from the S corporation. So I don't reimburse myself. I just pay directly from the S corp, and then it gets counted as part of the officer compensation on my books when we're doing bookkeeping. All right, next question.
Mars says, do you suggest the business owner keep his accounting software aligned with tax return?
Yes, that's Mars, you said?
Yeah.
Hello, Mars. Okay, so Mars is asking actually a phenomenal question, a question that will keep you away from IRS audit. Mars is asking you a question that will protect you against IRS audit. Okay, now let's repeat that question so everybody hears. Everybody should pay attention to this question. Mariana, can you repeat that question?
Do you suggest the business owner keep his accounting software aligned with tax return?
Okay. Mars is asking, hey, I have an accounting software, whatever that may be, QuickBooks Online, QuickBooks Desktop, Xero, I don't care. Does it have to be in line with my tax return? The answer is absolutely yes. And here is why. When your tax preparer, hopefully a tax preparer, the one that puts the right numbers in the right boxes, at least put the numbers in the right boxes, okay? The proper thing to do when you're preparing a tax return for a client, like, you are a client of your tax person, the proper thing for that person to do is that take a look at the financial statements that you get from your accounting software, and we're not perfect. Sometimes your bookkeeper is not perfect, makes some mistakes, or you're keeping your own books, or there's certain tax laws that let you write off certain things that were not accounted on your books. So what they do is called, and this is what we do for our clients, for all of our tax advisory clients, it's called adjusting journal entries, right? We adjust entries that were provided from the accounting software. And then we send the adjusting journal entries back to our client if we're not doing their bookkeeping, and their bookkeeper or their accountant then adjusts it to match it the tax return. And then we review those adjustments. The reason this is important is that when or if, right, or when you do get audited, what happens is that IRS will question items from your tax return, not from your books. And then you have to show what does that mean on a tax return? Meaning, let's say office expense, a basic category, okay, has things one category, but your books have few categories. Let's say postage and shipping, office supplies, and give me another one. What else do we have as let's say you bought some minor furniture, 2 or 3 computers, right? Small computers under $2,500, whatever that is, right? So you have all of this on your books. When preparing your tax return, usually on the tax return, no accountant, including us, or a good accountant at least, right? Don't put like all these categories. You don't need to. You kind of bundle everything into an office expense because this is all for an office. So when you do get audited, I'm giving you like a very simple example. They take a look at your office expense, like, hey, why is your office expense $105,000? Can we see substantiation? Can you show us proof? What does it went into it? Then you go to your books that match your tax return. And when IRS sees that you are organized, it's a win-win for you. Easier audit process, no dealing with the IRS, not trying to figure out, wait, what did I put on my tax return? What does this number mean? I guarantee you, almost 100%, like 99.9%, all of you right now can go back, open your tax return. All right, if most of you here probably have an S corporation, open that other deductions sheet, that statement that gets attached. Take a look at the line items of the categorization. You'll be like, wait, what is this? How did my accountant come up with this number? Why is this number so big? It could be that they just combined 3 categories from your books into the tax return. So does the book have to be aligned with the tax return? You bet it does. Next question.
Vincent is asking, can I pull income from S-Corp for only a few weeks a year?
Excellent question, Victor.
Vincent.
Right? Oh, Vincent, I'm sorry. All right. Vincent is saying, hey, Boris, you probably heard me talking about, right? I need to have a reasonable compensation. You say have a reasonable compensation as corporation. All right. But what if I take a salary only few times a year? Let's just, for argument's sake, guys, let's say 6 times a year. 6 times a year salary. Am I going to have a problem with the IRS? Not if you pay yourself reasonable compensation. Okay? Let's say your reasonable compensation is $120,000. Okay? So what does that mean? That means if you take a salary 6 times a year, make sure that it's at least $20,000 every time you take it, so it equals $120,000. IRS doesn't look at your pay periods, how many times you paid yourself, or your paychecks, pay stubs. They don't look at that stuff. They're looking at your total W-2 income for the year. All right, next question.
Okay, Mike is asking, can you briefly explain what an accountable plan is?
Briefly explain. I will come back to that, Mike. I will answer that because the reason is I want to spend some time on it so everybody understands what an accountable plan is. Let's see if we have any quicker questions.
Okay, Julietta would like to get an appointment. That's taxplanningcall.com.
Say it again. I'm sorry. I got.
Julietta is asking to get an appointment.
Oh yeah, by the way, for those of you that want to schedule an appointment with our team for your tax advisory services, we'll go ahead and put the link on the bottom below. Oh, you need the keyboard. Here you go. By the way, the person who's reading out questions, guys, it's my wife, Mariana. Let's show her some love. Let's give her some woohoo. Let's show her some love. All right, cool. Next question, Mariana.
Okay, from Mars. My company is incorporated.
By the way, can we all take advice of Vera over here? She says, everybody, please hit the like button. Let's do it, guys. Let's notify YouTube to show this live to as many business owners as possible so we can help them save money on taxes. If you agree that this video helps you save money on taxes, please notify, share, or subscribe. For those of you that have not yet subscribed to my channel, please do so. All right, let's get back to our questions.
Okay. My company is incorporated. And
That's who, Mars?
Mars.
Okay.
And I file as an S corp. How is capital gains income that the business earned tax? Is it passed through to me as capital gains?
Mars, you're saying that you have a business that is incorporated as an S corporation, and your question is the income that my S corporation earns. Is that capital gains or regular income? Is that what you're asking? Please say yes or no in the chat. Did he answer yet?
Not yet.
All right, let's move on to the next one. We'll wait for this one.
Oh, no. Okay. Vera Payne, if I pay the health insurance on an S corp for the owner, don't I have to pay the employee as well?
Ah, good question. You're saying, hey, if I'm paying health insurance as an owner for myself, doing the 2% health insurance reimbursement, am I not required to do the same thing for the employee? The answer is no, you're not required. That is correct. Now, if you do want to offer health insurance to your employees the most cost-effective way and the most tax beneficial, I'm not going to get into details right now, but I'm releasing a very detailed video this upcoming Tuesday on YouTube. Come to my live next week on Thursday after watching that video, and we can get into some details about that. But I'm releasing everything that you need to know about employees on Tuesday. We already recorded it, we already edited it, and it's coming out. Next question.
Mars is here. He says, my business has a CD.
Oh, your business is a CD, so is that what you're asking? So CD usually pays you interest income, okay? So CD is certified deposit, right? And it pays interest income. And when on your books, when you're doing your taxes, you want to record CD as an interest income, and then it's going to flow through to you personally as an interest income. Interest income and regular business income, they're all taxed at the same rate, okay? The dividend income and capital gains income, capital gains means if your S corporation buys an asset, let's say you bought a stock and you sold it and you held it for more than a year and you sold it, that is capital gains income, okay? Then your S corporation will pay capital gains tax on that. But on the interest on the CD or business income, it'll pay a regular income tax. All right, let's do it. Next.
Okay, Suzanne, it's her first time here.
Hello,
Can
Suzanne.
I pay for health insurance directly from an LLC for both husband and wife? Our only income is from the LLC.
That is correct. Whether you are a single member LLC, a multi-member LLC that is filing as a partnership, or you converted your LLC to an S corporation, you certainly can. We talked about health insurance a few times in this live. Now, I'm going to quickly say it again. If you do own an S corporation, in order for you to qualify as a deduction on your for your health insurance, you want to make sure it is part of your W-2. If you want more information on it, we have a video specifically for this on our YouTube channel. I really covered it in much detail. I also covered it in much detail earlier today. Next.
Question from Vera. My CPA said the health.
Your CPA? Copy, paste, and action? I'm kidding. I'm a CPA too. Let's go.
My CPA said the health insurance is a write-off anyway, so no need to reimburse through the S corp. Is this right?
Almost right. If he says the health insurance is a write-off anyways, you don't need to reimburse yourself from an S corporation, he's correct that you don't have to. You can pay for it personally. But is it included as part of your W-2? If it is not on your W-2, Vera, fire your CPA. Let's go.
Thank you. Julietta is asking, is it better to pay myself with W-2 or 1099 from S corp?
As an S corporation, you're not allowed to pay yourself on a 1099. Even though, really think about it, the net effect is the same. IRS does not like that practice because I said earlier today, what happens is that your S corporation is a separate entity that files a tax return, okay? It's an S corporation entity. It files 1120S. 1120S. What happens is that line 7 of your 1120S is asking for officer compensation. Okay? So, and they're looking for your W-2 income over here. So No, you want to pay yourself on a W-2, and this is one of the reasons why. And IRS wants you to pay yourself a reasonable compensation. Next question.
I think that's all for now. No, we have one more. I pay the health insurance personally, not through the S corp. So why would that be on W-2?
In order for you to take a deduction, Vera, it needs to be on a W-2. Now, I said earlier before, you can pay for health insurance personally as long as your business reimburses you for it, right? Your business either has to, number one, reimburse you for it or pay for health insurance directly. So is the business reimbursing you for it? The answer is probably not, and it's probably not on a W-2. If it's not on a W-2, you cannot take the deduction. Let me say it again. Even if the business pays for it, okay? Even if the business pays for it, it comes up from the business's account, but it's not on a W-2. You can't take a deduction. Next.
Waiting for questions.
Oh, we're waiting for questions, guys. The person who participates the most with questions gets this book mailed to them. Mariana will pick you as a winner. Please, let's go ahead. Let's ask questions. That's what I'm here for. Thinking outside the tax box. We usually sell it on Amazon for like $21, but it's yours if you participate. All right, questions. Let's go.
Vera is asking, can I do this now before the end of the year?
Yes, Vera. As a matter of fact, you can actually catch up on it as well. I think we talked about the catch up on last week's live. Yep, absolutely. Next.
Mike is asking, regarding reasonable compensation, should I just use a percentage of earnings or should I actually calculate the amount based on my rates, based on my pay rates for my job duty? It may be only 25%.
Yeah, excellent question. That was Mike, right?
Yep.
So, Mike, by the way, I think I've seen your comments on some of the YouTube videos, right? So, Mike is asking a question. Hey, how do I pay myself a reasonable compensation? Do I take a profit, right? A profit and take a percentage, or do I do actual time spent? The answer is IRS is looking for your actual time spent on each duty. So you're running the business. I don't know what business you're in, but I'm a tax accountant, right? I'm a CPA, but in my business, I don't do CPA work 100% of my time. I do this, right, which helps the marketing of our company for tax advisory services. I manage our sales team, right? And then I do CPA services as well, but not all of it. So I break down what is the percentage of each of my activity, and then I pay myself based on the hours of percentage. So let's say as a marketer, if the marketer gets paid $30 an hour, I would pay myself $30 an hour for how many hours I spend on marketing. If the CPA gets paid, I don't know, $100 an hour, then how much time I get spent as a CPA and so forth, and I calculate my reasonable compensation. Cool, next question. Guys, for those of you that participates, gets this book mailed to them, so please go ahead. And anybody that is interested to work with us for tax advisory services, we're going to put the link one more time, where you can visit www.taxplanningcall.com. Again, that is www.taxplanningcall.com. It's really important that you are proactive about your tax strategies and not reactive. All right, we got more questions. Let's go.
What is a good strategy for passing money to retirement account?
What? What is a good strategy for doing what?
For passing money to retirement account.
Passing. Okay. I need to know a little bit more information about the business type. Are you an S corporation, single member LLC? Do you have employees? And that'll do it. So send a follow-up. Next question.
My husband is now on Medicare, and it is the S corp. We are hiring you, by the way. So I can have S corp reimburse husband for his Medicare and let ADP payroll know. So it is on W-2.
Medicare. I would have to look into it. I believe for the fact that you do have a Medicare, your S corporation can still reimburse you. I would have to double check with the team. I think we recently done a research on that, and I think it's yes, but I'm not 100% sure on that. Let's go next.
Okay, Paul, it looks like you didn't fully ask your question, so if you can just rewrite that out and we'll answer it. Suzanne is
No, Paul is good. That's the guy that asked about the health retirement account.
No.
Oh.
That was Julieta.
Oh, Julieta asked about retirement.
My business is a single owner LLC S corp, and
okay, Paul. Yeah, we need you to finish your sentence. Next.
Suzanne, is there an income amount where it makes sense for us to convert to an S corp?
Yes, Suzanne is asking a great question, right? Suzanne, I don't know if I spelled your name correctly. Forgive me if I didn't. Did I?
Yes, you did.
Oh, I get a candy. All right, cool. What's so funny? All right. By the way, who's enjoying this so far? Who thinks this is helpful? Let me know because I'm trying to like really spend a lot of time on each strategy. If it's helpful, say helpful. All right, cool. So Suzanne is asking Boris, what sense does it make sense for me to convert to an S corporation? So before 2017, right? I would say before TICJA, which is Tax Cuts and Jobs Act update, I used to say you make 40,000 to 50,000 in your profit in the business, you can start converting to an S corporation. Now, after TICJA, because we have something that's called qualified business income deduction, IRS basically gives you free 20% off the top of your income. Okay, I say about $80,000 because I've done the math. Because being an S corporation, right, comes with certain expenses. You have to pay payroll processing fees. You have to file separate tax returns for an S corporation. You have to pay a couple of other things like state unemployment insurance tax. And although a lot of accountants out there, they say, oh, become an S corporation right away. All you need is $40,000 in profit and you're good to go. They are lying to you. I'll argue anybody, okay? The reason they said 40,000 and become an S corporation, even if it was before 2017, before TICJA, is because they want to charge you more to do your S corporation tax return or to do your payroll, okay? So it always breaks even. It always breaks even. What I recommend is that if you're starting a new business or if you do have a business already, or right, and you're not an S corporation, become an LLC business because LLC has the flexibility to convert to an S corporation or C corporation at any time during the year. So if you're an LLC and like I don't know if I'm going to make 80,000 in profit this year, so I'm going to remain an LLC, and all of a sudden by July you make 200,000 net profit, you're like, why is it too late? No, you're an LLC. You have the flexibility to convert to an S corporation at any time. Now, if you were a sole proprietor, which is not any business entity, then you're only would be considered an S corporation from the year that you became, let's say in July, in our example. Okay, then all the income before that, before July, can be part of the S corporation. So if you're not sure if you're just starting a business or starting a second business, a lot of people start a second business and they become an S corporation right away. Hold your horses. Become an LLC. I did a video on this, okay? Become an LLC. Wait, work with a tax advisor, okay? Tax advisor will tell you the truth, okay? And then gradually, when it makes sense, because working with a tax advisor and doing tax planning for yourself, that means evaluating your tax numbers every quarter, okay? Every quarter. And these are the types of things that we evaluate on a quarterly basis for our clients. Next question.
From Jack, can an S corp distribute dividends in addition to W-2 to myself?
Oh, guys, a lot of people on this live have been educated by me a lot that I will give you a chance to answer Jack's question. But Jack, I promise you I'll answer your question in a few minutes. I just want to see if I've talked about it enough that other people know the answer to this. Jack is asking, right? Let's do again. What did Jack ask? Jack is saying, where's Jack's question? Went too far. We lost Jack's question. Jack's question got mad at us.
Oh, I got it. Can
an S corporation distribute dividends in addition to W-2 to the owner? Come on, guys. Somebody answer that. But Jack, I promise you I'll answer that question. Let's go. Next question.
Andy says they can pay in distributions. Jai says yes.
Okay.
Vera says yes.
Okay, I like your answers, but no. Wrong answers. I think Andy got right, okay? There is no dividends, okay? There is no, so to speak, dividend distributions from an S corporation. There are dividend distributions from a C corporation. Now, S corporations, I guess you can call it dividend distributions. They're not taxable, so really they're just S corporation distributions, okay? So Andy, not Andy, sorry, Andy, we answered so many of your questions. That was Jack, right? So Jack, let's say, for example, your business made $500,000. You paid yourself $100,000 on a W-2, and you're left with $400,000. Can you distribute this out to yourself? You absolutely can. You absolutely can. And let's say out of the $400,000, you only distribute to yourself $300,000. you're going to pay tax regardless of how much you distribute to yourself on a full amount of your profit. Now, 300,000 will not be taxable to you because you paid tax on 400,000. Now, let's say you took 300,000 and you're left with $100,000 in a bank account, and you took this $100,000 next year. Do you pay tax on it next year? The answer is no, because it was already taxed in year one. I hope that was helpful. Let me know if that was helpful, Jack. Next question.
What general advice can you give to an S corp in the fourth quarter?
What general advice can you give? So you're asking me to read for you and interpret for you the 80,000 page tax code. No general advice. Got to be specific to your situation. Next question.
Mars is asking, what if you are not correctly accounting for health insurance on both your corp and personal returns in previous years? To fix that, do you have to amend those returns, or is there another easy way?
No, there's no amendment. Just going forward, you would have to do it. Can't fix the health insurance mistake. I mean, you technically can. I'm not going to say you can't fully. Like, let's say it was included on your W-2, or the business was reimbursing you, and you now want to include it on a W-2, the net effect is going to be kind of the same because you didn't use the strategy of including it as part of your reasonable compensation. Just do it going forward. Now, if you missed it out throughout this year so far and you haven't done it, that can still be fixed. But for priors, nada. Let's go.
Are these recorded and posted? I have to jump to another meeting. Yes.
April, yes, it is. It's going to be on the YouTube channel. You go to a live section and you'll see all the recordings we had from the live session.
Mars is asking if we provide services in California.
Yes, we have plenty of clients in California. As a matter of fact, I love clients from California because I'm from New York and people from California are more chilled than the New Yorkers. Next.
Mike is asking, I have an e-commerce company. Many tasks are automated. If I break it down by time spent and going pay rate, it may only account for 20% of earnings. Is this a red flag, or is it okay if I can justify it?
I'll be honest with you. That's a great question, right? That was Mike, right? Mike says, hey, I have an e-commerce. A lot of things are automated, and I understand why. I know the industry very well. And like, if I'll break it down by what I do in a business, I don't really work 40 hours in the business, okay? I don't really work. And it will come out that my pay will be 20% of the profits. Could that be a red flag to the IRS? The answer is, it may be. And then you would have to substantiate. It's like, I really work like 20 hours in the business, and this is exactly what I do. Like, you would really, really have to have a good documentation on that. Yeah, next.
From Andy, for the sole prop FMC, wouldn't the IRS question if your child is the only one getting paid to manage the properties in the FMC, and they would assume that I'd be managing them also? So I was assuming the S corp would have to pay more than my child's salary, say $12K, and that additional income for me to also manage would flow to my tax return, and I'd have to pay FICA.
That is correct, Andy. You're right on point about what we were talking about before. Ordinary, necessary, and reasonable. You want to pay yourself a reasonable management fee. So whatever that may be. So your management fee could be $20,000, and then you pay your child up to $13,850. You're correct. You want to make sure that the amount for management charges is reasonable.
How do we use the Augusta rule at this point in the year?
That was a question from LackMax. So I don't want to get into details of Augusta rule. First of all, you can't use it right now. We talked about it briefly on the last week's live. I've made a video on it that we're going to be releasing in 2 weeks from today. No, 2 weeks, yeah, on Tuesday. And the reason I want you to watch that video is because I made it so detailed, and there was recently an IRS court case that disallowed an Augusta rule for a business of an S corporation with 3 owners that reimbursed themselves $290,000 in a span of 3 years for Augusta. And IRS came up with this ruling that disallowed it. And they said, hey, if you want to use the Augusta, this is what we looked for, right? This is the IRS's decision. And I love that court case because it gives you and me, you the business owner, and me as your advisor, and all right, this is the groundwork. This is the groundwork the IRS wants us to follow. So I'm not going to get into details of it. Stay tuned. I promise you it'll be a great video. It's already done and edited. It's scheduled to be released in 2 weeks. Next question.
Single S corp in insurance sales, and not sure if that is the best way for me to pass savings to 401k, or should I change corp type?
So the question is from Julietta. She says, I'm a single S corporation owner, and I do insurance sales. is the best way to save money on taxes to put into retirement, or should I change the corp type? No, the fact that you're an S corporation already saving you money on self-employment taxes. Retirement strategy is an additional write-off that you can get in an S corporation. Next question.
Jules is asking, I have an S corp. What type of dividend am I paying myself? Does the amount of the dividend affect my tax bracket?
No, it does not. Comes back to our certain this example before, is that let's say you made $500,000 in your S corporation. You paid yourself a salary of $100,000. You're left with $400,000. You're going to take that as a dividend distribution. Fine, we're going to call it dividend distribution. Okay, but that dividend distribution is not taxable to you. Okay, so let's say out of $400,000 that's left in a business, you're only going to take out $300,000. Do you pay tax on the $300,000 or do you pay tax on the $400,000? The answer is you pay tax on the $400,000 because it's a pass-through entity. Okay. Now you're like, well, Boris, I am left with $100,000 in a business. What happens to this $100,000 next year? You can take it out as a dividend distribution again, which is not taxable to you because you already paid tax on it in your first year. Next question.
Okay. Oh, 1 second. Just want to.
Guys, the person that participates the most, Mariana gets to pick the winner. I think she's already. You have your list of winners, right?
Yeah.
You got 2?
Track.
You got 3?
Yeah.
Ooh, we're only picking 2. We're only picking 2. Ask away. We got 8 minutes on the call remaining. 8 minutes.
Okay, Mohammed is asking, if I pay a foreign contractor freelancer, will it be considered as an expense? How do I pay them?
A foreign contractor freelancer will be considered an expense. Absolutely. Please make sure you get invoices from them, and you can pay them electronically. And I pay my contractors, foreign contractors that do some marketing work for us, some graphic design, whatever that is, but not tax work. Okay, all tax work is done in-house, I promise you. But we do have some foreign contractors that do some graphic designs for us, and we pay them through Gusto. And Gusto actually issues what's called if I'm not mistaken, W-8BEN. That's usually done for foreign contractors. They make them fill it out. So that's what's done, but you can absolutely take it as an expense and make sure they invoice you.
Jai is asking, my single member S corp had no income, so I couldn't pay myself a salary. Could I still claim office expenses, etc., especially my health expense?
So somebody's asking, hey, I have an S corporation, didn't have an income yet. The business was not profitable, didn't make money. Do I claim an owner's salary? The answer, no, you don't have to. Can I claim expenses? Yes, if your business was already active and opened its doors, so to speak, to do business, then you can absolutely claim those expenses and claim that loss on your personal taxes. And I think he also asked if you can claim health insurance. Unfortunately, health insurance is claimable if you have a profit in the business or you have a W-2. If you have a loss in your business, like no income coming in and losses, I do not see a point of making a W-2 for yourself just to take health insurance. It will not help you out. Next question.
Do I need to file?
Can we get likes on this video, likes and hearts and whatever that is, so I know people are participating? Let's go, guys. Show me some love. All right, let's go. Next question.
Do I need to file to IRS to convert to an S?
Yes, Katie, I actually put out a great video a couple of months ago. It's called S Corporation Election. You need to file Form 2553. I normally do not recommend this form to be done by you, but your tax advisor. But business owners still tend to ignore what I ask them to do. So they file their own, right? Not our clients. Our clients don't ignore me. But people that here listen to me online. So I've decided to make a video on this so that people don't make a mistake, okay? And file it properly. I actually have it, a very detailed video somewhere on YouTube. It's called S Corporation Election. You have to file Form 2553. Next question.
How long does S corp approval take?
60 to 90 days. It takes IRS to approve S corp election between 60 to 90 days. Crazy story. We had a client that filed for an S corporation election 2 years ago. We're calling IRS, following up, like, nope, we don't have it. We never received it. And the client said, just forget it. I want to remain my SC corp. But great. You know, he said IRS confirmed that they haven't received it. 2 years passed, guys, almost 2.5. We get a letter from the IRS last week. We approve your S corporation status. And it doesn't happen every day. I think that was because we sent that election before COVID. So crazy. Yeah, next question.
What about dividends on investments made through S corp?
Vera, didn't you say you're going to be working with us? Save all your questions for the tax advisor. I'm kidding. All right. Vera says, what about dividends on investments made through an S corp? Yeah, they'll be passed down to you personally. So Vera is saying, hey, Boris, if my S corporation invests, for example, in certain assets, let's say stocks, that pay me dividends, how does S corporation pay tax on it? So S corporation is a pass-through entity. It will receive that dividend income, and then it will be reported on your K1 as a dividend income, and that will be then passed through to you personally as dividend income. Next question.
Is it true that you can't double dip for home office? So I have myself as insurance broker, and we have Airbnb as well.
Is it true that you cannot double dip yourself for home office? I'm not sure what that means. Now, I don't know what having a home office and Airbnb have anything to do with it. Are you having a home office in the same spot you're having an Airbnb? And is your Airbnb available for Airbnb 365 days a year? Or do you also live in part at home? I would like more clarification on that.
Same person's asking one more. My husband and his buddy have a rental property under LLC. Now, between personal and business, can we still claim home office for their LLC?
You can still claim home office even for your rental property. That's no problem at all, as long as you can substantiate it. I'm using my home to do the admin work and what's not. Absolutely.
How can I go back and pay the health insurance this year if I'm on an accountable plan? Only allow 60 days to submit receipts.
Yep.
We're going to talk
Oh,
about
we
accountable
we
plan.
promised somebody we're going to talk about accountable plan. Wow, I missed that one. That's a great. Thank you for bringing that up, Vera. So Vera, I'm going to answer your question by explaining what is an accountable plan. Okay. First, let me explain what is an accountable plan.
Well, we have a lot more questions.
We have a lot more questions. You guys woke up a little bit too late. I've been here for like an hour, and we have like a hard stop in 5 minutes. But we can probably go over 5 or 10 minutes. Cancel my meeting with the president today. I'm kidding. All right, cool. Who thought that was funny? Come on, say funny if you thought that was funny. I thought that was funny. All right, accountable plan. What is an accountable plan? Okay, now accountable plan is basically a reimbursement arrangement, right, that allows a business owner to reimburse its employees for business-related expenses. Now you might say, Boris, this sounds so simple. Like, let's say you've got an employee, Anna, and like, hey, Anna, we're out of some office supplies, a coffee machine needs some coffee, milk, and she's like, hey, go buy it. She goes out and buy it, and you reimburse her for it. And IRS says, nah, you can't do that. You can take the reimbursement, but you have to pay to her as a W-2. It's like, what nonsense, right? There's some things that IRS does, I just don't get it. So they say you need to set up a reimbursement arrangement, which is called an accountable plan. Accountable plan basically says, hey, you can reimburse your employees for any business-related expenses. Now, we're doing tax strategy. We're tax advisors, and you are business owners. How can we take advantage of an accountable plan? Very simple. If you use a home office as an S corporation, unfortunately, you cannot write it off directly its expenses if you are a sole proprietor. If you are a sole proprietor, the deduction is pretty simple. On your personal taxes, there's a certain form. For S corporations and corporations in general, it is not so simple. You need an accountable plan, which is basically says, we are going to reimburse our owner employee for use of the home office. Now, what Vera is saying, accountable plan has a rule. You as an employee have 60 days to provide expense reimbursement report, right? Hey, employer, please reimburse me. An employer has 30 days to reimburse you. Okay? That's simple. So if you're using your home office, you've got 30 days to submit this paperwork to your corporation, and your corporation you have 60 days to submit it, and your corporation has 30 days to reimburse you. So Vera is saying, hey, Boris, you're telling me throughout the slide that I can go ahead and fix my health insurance problem, but the accountable plan only allows 60 days. So Vera, I think you are confusing the two strategies. Health insurance reimbursement has nothing to do with an accountable plan. It really has to do with adjusting your W-2 payroll. And the business can still reimburse you without an accountable plan if you paid for health insurance personally. And the business hasn't reimbursed you all this time. Go ahead and fix your W-2. Speak to your tax advisor. I hope you have a tax advisor. Speak to your tax advisor. Get that fixed and reimburse yourself that amount. And as a matter of fact, you don't really need to reimburse yourself. Like, you can just adjust your distributions, whatever that may be. Like, technically by law, you have to reimburse yourself, like cash out from one place to another. But if you took out enough distributions from the business, you can reclassify that as reimbursements. Your tax advisor, your tax accountant would know what I'm talking about. Like I said, guys, I'm doing this video for you to educate you enough so that you can go and speak to the right person, whoever you're working with, to get this implemented. Please don't try it at home. All right, cool.
I'm
By the way, did anybody say my joke was funny before? I'm not answering any questions.
I can't go down because if I go down,
You're gonna lose the questions?
I feel like I'm gonna lose the questions.
All right, guys, we're gonna speed up the answering of the questions because we really have a hard stop. I got a meeting with the president. All right, cool. Let's
I'm
go.
a single insurance agent in my first year of business. Is S-Corp best suggestion for me? Expect to do about 100K gross in my first year.
Okay, Juliet, I don't know if you were earlier on the live, but I did say if I personally recommend a profit of $80,000 before you convert to an S corporation. If you're not going to have that much profit in the business, you being your first year, that's totally okay, right? Every business owner goes through that growth. So I personally would not recommend you become an S corporation if your profits are going to be less than $80,000 for the following reasons. Becoming an S corporation will obligate you to start running payroll and pay payroll processing fees. You would have to file a separate business tax return, and you will lose out on some part of the QBI deduction, which will in fact then negate the tax savings of being an S corporation. So it's going to be a wash, and you're doing all this extra work. That's my personal recommendation. I stand by it. I'll fight any accountant on it. That's exactly what we do for our clients. Next one.
As a single member LLC elected S-Corp, am I still a sole prop or a corporation?
As a single member LLC that elected to be an S corporation, am I still a sole proprietorship or a corporation? You are an S corporation.
We have an LLC and I run errands for my husband's business.
Can we say out the name of the person that's asking a question?
Sure. Suzanne.
Suzanne. Hello, Suzanne. One more time. Hello. Let's go.
We have an LLC and I run errands for my husband's business. Should I just submit an expense report for the mileage or say we use the second part for business? Does it matter?
It does matter. You need to submit expense report to be reimbursed for that mileage, 100%.
Jane is asking for vehicle.
Hello, Jane.
For vehicle deduction, is there any rule or restriction we can either use mileage or itemize all your vehicle expenses?
For vehicle deduction, is there any rule or restriction we can either use mileage or itemize all your vehicle expenses? Great question, right? So generally speaking, if the vehicle is used for more than 50%, what I've seen for our clients is that the best approach is to use the actual expenses, right? That would also include depreciation, lease payments, or interest on your finance and anything else that goes with that. Now, the vehicle that is used less than 50% of the business, we've seen that the better advantage, a better deduction has been a standard mileage reimbursement. This is not true for everyone, but for majority. So I certainly recommend you speak to your tax advisor to run those numbers, because remember, you always want to make a decision on data, not on general information. And that is what tax planning is. It's solid tax savings data. Next question.
What type of retirement account do you recommend for the S-Corp? I have a personal Roth IRA. Do you recommend a Roth 401k? What entity type is best?
It's preference, right? So if you have an S corporation, Mike, that's Mike, right?
Yes.
Why are you forgetting to read out the names?
I'm sorry.
I'm going to take you off payroll. I'm kidding. She's my wife. Maybe you're nervous. You're not even on camera. All right, cool. For all people, no, you could be some AI over there pretending like you're my wife. But okay, cool. Mike is saying, hey, Boris, what type of retirement account should I have? I have an S corporation and I also have a personal Roth. It really depends on preference. Some people don't like to have a retirement account because like, hey, what's the point? I'm going to get a write-off right now. I'm going to pay tax on it later. Some people like, I don't care about write-off. I just want tax-free growth. So they open up Roth. The fact that you have a personal Roth, good. You can actually put that on steroids and open up a solo 401k Roth. Definitely speak to a financial advisor that can make that happen for you, but you can certainly make that happen. Next question.
Okay, we answered Jack. If we work with California clients, yes, we do. Morris, do you withhold on those foreign contractors if they are performing the work offshore?
Yeah, I'm not 100% on overall foreign individuals working in the United States. I think the only time you would have a withholding for a foreign contractor, if that foreign contractor also comes and lives in the U.S., I think that's the time that you would withhold. But if it's completely foreign contractor that is not living in the U.S., not coming in on any type of visa or anything of that sort, you don't do any withholdings. Don't take me 100% for it. As far as I know, like I said, I'm not an expert on any of the foreign stuff. But as far as I know, if you've got a foreign contractor and they're not in the US at all, and they don't come here or anything of that sort, they can make their money from the US people. And you don't have to have any withholding. That's as far as I know. That's my kind of knowledge, but don't take me up for it.
We have another question about foreign. How is a trip to see a foreign vendor classified? Can I pay for meals and accommodations while abroad?
I'm going to answer it very generally. The answer is 100% yes. The trip, the meals can be deducted if you're visiting a foreign vendor.
Thank you for an excellent answer from Jai. Thank you for your question.
What was the question from Jai? Oh, you can't find it.
I can't find it right now. I'm just going.
No, I always said it to your mom. You're too lazy. I'm kidding. It's the worst thing to say to a wife, right?
Can I file 2553 convert to an escort for year 2022 as late election? This is a question from Max Auto Towing, but my client hasn't paid salary. How do we make a late salary for him for 2022?
I don't want to answer this question on a live. Not that I'm going to say anything wrong, but it's a very complicated situation. So this was Max, right? Max says, hey, the 2022 year is over. Can I make an S corporation election? First of all, the answer is yes. Can you make a late S corporation election? Yes. I think if you watch my video on the S corp election on YouTube, I talk about that. The problem becomes that owner didn't pay him or herself a salary on a W-2. That becomes a problem. If you do make a late S election and you report all income as an S corporation and not pay any FICA taxes on a salary, then that could be picked up for an audit and disallowed the distributions that were made for that year. So it's a little bit of a complicated situation, but I hope that answers your question. Next.
Want to start payroll when Form 2553 is being processed?
As the year that you're going to be an S corporation, even if you file Form 2553 for an S corporation, the question is as follows. By the way, it's a great question. Like, if I applied for an S corporation status, when do I start processing payroll? Do I wait for it until the S corporation status is approved by the IRS? The answer is no. You do not have to wait for it. You can start processing payroll right away.
Accountable plan was my question. From
Mike. All right, how about I answer your question?
Jai confirms you're hilarious.
Thank you, Jai. Appreciate it. One person said I'm funny. Thank you. We're past our time. All right, it's 1:08. We got 2 more minutes. Let's go. Let's do a quick one.
Do I track actual vehicle expense in the book, even if the standard method is ended up being more beneficial?
No, you don't need to track actual expenses. What happens is that you don't need to pay for actual expenses for vehicle from the business. You pay for them from personal, and then you reimburse yourself personally for the mileage usage. Next question.
For Eddie is asking, for Escort, do you prefer SEP IRA or solo 401k? 401k has higher contributions but more fees and paperwork.
Eddie, you're right on point. I made a video on this SEP IRA versus solo 401k, and I tell you right now, the higher deduction is a solo 401k. It may be a little bit more expensive, but if you're going to maximize it, your deduction and the savings will outweigh those costs.
Okay, Vera saying, looks like you will be my new tax advisor. We're looking forward to crushing it for you.
All right, sounds good. Next one.
Drew is asking, about to buy a cash flowing franchise. I plan to use Rob's plan for majority of purchase price. I've watched your video on the double, triple taxation on C-Corps and why it's not ideal. What strategy do you recommend to eventually transfer it to an S-Corp? That was the last question.
All right, we're going to do the last question for today, guys, because I do want to spend a little bit of time, even though we're limited on that, okay? For those of you that don't know what ROBS is basically a financial vehicle that allows you to tap into your 401k, and that money from 401k will fund your business to help you start the business, okay? Now, what happens is that the requirements of it, one of the requirements is that you need to be a C corporation until you pay back your 401k that you done. Am I correct here? Who was that question? Drew, am I correct here? Because I'm not like an expert on ROBS, but this is like more of a general stuff that I know. Now, Drew is saying, hey, Boris, but I've watched your videos and C corporations. It looks like it's not the best entity. You are correct. So because you have ROBS, you need to be a C corporation until that business is taken care of, and then you can convert to an S corporation. Now, when you do convert to an S corporation, you might, yes, I'm correct, right? So when you do convert to an S corporation, you definitely need to speak to a tax advisor about this. Here's why. Let's say you had $500,000 and you said this is going to be a cash flow business, right? $500,000 in accumulated earnings and profits. That's what it's called in a C corporation, A&P, okay? A and P. That means that you pay tax to C corporation, and when you dip into this, you pay double tax. So when you convert into an S corporation, one of the things you have to figure out, like, how much A and P do I have? Because A and P is not going away. You would still, whenever you tap into this money, even when you're an S corporation, you would be double taxed. Okay. The second thing is, does business have any assets? Okay. There could be something that's called the built-in gains tax, but again, this is a kind of outside of the scope of this whole live, right? Because you're typing in an answer, I'm giving you typing in a question, and I'm giving you an answer. So what I would recommend is to definitely speak to your tax advisor when you're doing this. All right, I hope that answers everyone's questions, guys. Thank you so much. Now, winners. So we can send you this book.
Right.
Mariana, who are the winners?
Okay.
How many winners we have, by the way? How many people on your list?
I have 3 people.
3 people. We're gonna give it away for 3 people. We're not gonna limit it to 2. Let's go. By the way, in order for you to get the book, the way it works with YouTube is like, even though I see who's asking questions, I have no access to your data or your email address. So we're gonna put our email address right now on the bottom. Email us, letting us know, hey, you called out my name, I won the book. First of all, let's do the winners. Who are the winners?
Okay, Mike D asked a
lot of questions. There's 2 books, but we're only gonna send you 1.
Andy, I just don't have the last name.
Andy, yep.
And Julietta.
All right, let's put in the email address where they can email.
What's the email?
Boris.Musheyev. Yeah, let's use that email. All right, we're gonna put in the email. No, Boris.Musheyev. Yeah. Just email us with your information. Like, hey, Boris, this is my address. Ship the book here, and we'll go ahead and ship it to you. For those of you that were watching replay, we should have been mentioning it. Please make sure you like the video. All right, cool. Boris.Musheyev and Boris Mtak. Yep. Just email that address. Be like, hey, I requested a book. I got a free book on YouTube Live, and provide your address, and we'll ship it out to you. Thank you so much, everyone. Take care.